Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, October the 18th. The year's 2019. Let's talk trading. It's time for the weekly wrap up. Okay, as you know, we start the week and we wrap up the week, stressing the importance of money and risk management. Now, a trader sent an email asking about setting the risk if you're using the wick zone. And I had to reply that it doesn't matter what method you're using. Risk is independent of the method. What you do is you decide before you even pick a method how much you're willing to lose per trade, whether it's a dollar amount or a percent of your portfolio. And that's it. So you keep that risk constant. At least you don't let it go past this point. Maybe on some types of trades, you only want to risk half what you normally would. So let's just say you risk $50 on a trade, but maybe you're trying out a new system and you know what? I only want to risk $10. So I'll reduce my position size to the point where when it hits the stop, I only lose $10. So I can't stress it enough. Risk is independent of the method you're using to trade. So I hope that trader is watching this video, and I hope this point is made. So for the week, oh, imagine that. All the gaps have filled. Boys and girls, there was one that it took all week to fill, but it filled. So if you didn't profit off of the gap fill, that's on you. Of course, fellow traders, these videos are for educational purposes only, and your results may differ from mine. And Forex trading, as all trading, is very, very, very risky, and you can lose all your money. So, that being said, if you need advice, financial advice, seek it from an accredited financial professional. That way, when they lose your money, you know it was lost by an accredited financial professional rather than by somebody you heard on YouTube or listened to off of some website. Okay, so we see gaps have filled. We're 16 pips above the open on the week here, 45 pips off the high and 45 pips off the low, sitting right at the weekly midpoint there. Okay, 115 pips below the open. You can see here where the pivots were. Or was that the mid dot? No, I think that's the, you know what? I don't remember if I put pivots on here or mid dots. Let me double check. It's hard to tell. Previous, no, that's the mid dot. Pivots are purple. That's right, that's magenta. So we opened below the midpoint the previous day, came up, and then reversed off of it. For the month and the week, we're up. For the year, we're still down. Like I said, 115 pips below the open. Okay, now, what do we have here? You see, today's candle entered the opening range for the first trading day of the year and then exited. That was a trade that we see happen more than once. So you see here, entered, exited, entered. Actually, it started out in here. It entered here, exited, came back in, exited, came back in, exited. So those are little trades that you can look at. And here we have the opening range for the first day of the week and the opening range for the first day of the month. Simple trades. We've talked about it all week. And here's the weekly wick zone. You can see here it shot out on Tuesday, and we're still above the weekly open. Now, the inside bar, we got back inside it and we exited. once again, and then we got back inside the monthly inside bar here, and then it exited. So right now we've got a little fight between the previous month's inside bar and then the inside bar, daily inside bar from 2 days ago, seeing which way price is going to push. And remember, you can do this analysis on other pairs. I just like to stick with the yen. I like to trade the yen because of how it trades very methodically. You see here in the range, we've got 3 over 100 and the pound CAD clocking in right at 100. So I guess all the big moves happened earlier in the week and things are dying down on Friday. Okay, we had a reversal off the H1 highest open a few bars ago, 5 bars ago, H1 bars ago. And you can see here we just put in an H1 lowest open for the day. Right here, it's 7 o'clock my time. And that's 10 o'clock New York time. And you can see here, price moved down, now it's moving up. And right here, you can see it crossed below this wick and then started coming up above. Could have always triggered in lower if you wanted to take that chance of the reversal. Pivot point between the buy and the sell zone here. So no real bias. And you can see here, if you would have triggered short, that would have been a pip or scratch trade. Here, you can see it triggered, never really got. That might have resulted in a loss. And then right here, you can see you had a nice little short to the bottom here. Good for a handful of pips. You can see you're above the weekly open, below the daily, kind of a no man's land right here. Rat zone, only 30 pips, so no real rat trading. We took out the pivot, and you can see we're going to miss that weekly pivot. Maybe next week we'll pick something up at 107.92. On the missed pivots, you can see we still have that one missed, but we're looking for 107.92, 107.66. So if we take out this one, we'll also take out the weekly pivot. Price action, as I've stated before, price doesn't like staying between the two lines. You can trade the reversal here. 2 ball at the top, red at the line. 3 ball at the bottom. There was a green at the line trigger, but it's pulling back down. Wick zone, in and out, back in and out, and then back in. Crossing the previous week's high here a few times, just trading with candle color, nothing esoteric, no higher math used. And you can see at the tick level, we were just kind of cruising along here. Nothing to write home about. Einstein line had a trigger. But you can see here, price isn't making new lows. So you want to be in and out quick if it shows any sign of reversing. Looking here at the ATRs. You can see price almost hit the ATR. Are they open plus half of the ATR, the min ATR for the week? But not quite. And for today, you see from the daily open and hit the half of the ATR. But remember, the yen ranged 30 pips today, only 90 for the week. So those ATRs are pretty close, just meaning take your profits when it presents itself. Don't try to go for the home run. Because, I mean, if you captured the entire range for the week, you only got 90 pips. So, that's nothing to sneeze at, but that's really nothing to write home about either. I mean, I would say if you got 90 pips, you're averaging almost 20 pips a day. Technically 18, but and that wouldn't be bad, especially if you're trading with some size. So, fellow traders, that's it for the weekly wrap up. I hope if you remember the videos this week, we were basically talking about going back to the basics. You don't need anything fancy. Uh, it's. I just find it so amusing. These guys, one day they'll be telling you about this great system, and the next day they got this other great system. Now they got this new thing they discovered, and this, that, and the other. When you can just simply put a couple horizontal lines on your chart, trade the direction price is crossing the line, and you can do just as well, if not better, than some of these funny named systems. So, that being said, fellow traders, I hope you had a profitable week. I hope you have a fun and safe weekend coming up. And remember, when you come back here next week to trade, it's not what you trade, it's how you trade it. So get out there and drain the banks, or come back next week and drain the banks. Oh, by the way, if you haven't hit subscribe, come down here, hit subscribe, and click on the like so you know when I put out a new video. And yeah, I've got a bunch of movie review videos I need to upload too. So, TheRumpledOne signing off.